An international cybersecurity company, CB, has no fixed place of business in Australia. They send some employees to Australia for 7 months to share some cybersecurity expert knowledge and techniques with local Australian cybersecurity firms in return for a fee. What are the GST implications for CB? GST potentially applies to transactions that are connected with the indirect tax zone. The term indirect tax zone is basically a reference to Australia. As far as the supply of goods is concerned, the supply will be regarded as connected with the indirect tax zone if the goods are delivered in the indirect tax zone, made available in the indirect tax zone, removed from the indirect tax zone, or brought into the indirect tax zone. A supply of real property will be connected with the indirect tax zone if the real property is located in it. As far as supplies of services and intangibles are concerned, they are connected with the indirect tax zone if the supply is done in the indirect tax zone. However, note that an exception applies to cross-border business-to-business supplies of services and intangibles, in that they are not deemed to be connected with the indirect tax zone. As far as the supply of services and intangibles being done in the indirect tax zone is concerned, contractual rights are considered done where the agreement is made. In contrast, services are considered done in the location where they are performed. Another way that supply of services or intangibles can be connected with the indirect tax zone is if the supply is made through an enterprise that the supplier carries on in the indirect tax zone. This will be the case if an individual, employee or agent carries on an enterprise in a fixed place in the indirect tax zone. Where there is no fixed place in the indirect tax zone, it will also apply where the enterprise is carried on or intended to be carried on for at least 183 days in a 12-month period in the indirect tax zone. CB sent employees on contracted work in Australia for 7 months. CB will be regarded as carrying on an enterprise in the indirect tax zone, and so the supply will be connected with the indirect tax zone. This is because the employees carried on an enterprise in the indirect tax zone for more than 183 days in a 12-month period. There are also other circumstances where supplies of services and intangibles are connected with the indirect tax zone. This includes where the supply is a right or option to acquire another thing connected with the indirect tax zone, where the recipient is an Australian consumer, and where, regarding telecommunication services, the enjoyment is in the indirect tax zone. Exports of goods that are consumed outside the indirect tax zone are GST-free. This law is designed to promote Australian international competitiveness. The export must be made no later than 60 days after the receipt of any consideration, or if earlier, no later than 60 days after the issue of the invoice. Services and intangibles are also GST-free if they are considered exports. This will be the case when their supply is connected with goods or property located outside the indirect tax zone, when they are made to non-residents that are not located in the indirect tax zone, or are enjoyed outside the indirect tax zone. When goods are imported into Australia, they will typically be taxable importations. This will be the case when a taxpayer imports the goods into the indirect tax zone and enters the goods for home consumption. Entry for home consumption refers to the goods passing customs. When there is a taxable importation, 10% GST is payable by the Australian recipient on the value of the taxable importation, which includes not only the customs value of the goods, but also costs of inwards transport, freight insurance, loading costs, and customs duties. For instance, Jack lives in Australia and buys a European clothes dryer from an overseas seller for $1,500, including all costs. Jack will be liable to pay GST of $150. However, taxable importations that are imported for a creditable purpose by a registered entity constitute a creditable importation. In such an instance, the importer is entitled to an input tax credit to offset the GST liability from the taxable importation. Some imports are non-taxable importations, meaning they are not subject to GST when imported. This will apply to goods that are GST-free, input taxed, as well as others such as low-value imports. Low-value imports are goods that cost under $1,000, and overseas suppliers now may be subject to GST on these transactions, which is generally passed on to the Australian consumer. For instance, Jill lives in Australia and buys a Malaysian medical aid from an overseas seller for $2,000, including all costs. As the medical aid is a GST-free item, Jill will not be liable to pay any GST. To recap, transactions connected with the indirect tax zone include the supply of goods, the supply of real property, and the supply of services and intangibles. Such supply transactions are potentially subject to GST, though exports are generally GST-free. Taxable importations result in a GST liability for the Australian recipient, though when used for a creditable purpose by a registered entity, there can be an offsetting input tax credit. Non-taxable importations, such as GST-free goods, are not subject to GST when imported.